So let's talk about something really weird that's happening with a company right at the heart of the AI boom, Micron Technology. They are putting up some of the best numbers in their entire history. I mean, they're breaking records left and right, and yet their stock is falling. Why? We're going to unpack this classic Wall Street mystery.
You look at the numbers, and this stock should be an absolute rocket ship. So what is really going on here? Well, to figure out why it's dropping, first you have to understand just how incredibly good the news actually is.
Okay, let's start with the bull case. And honestly, it's about as strong as it gets. We're not just talking about a company that's doing pretty well. This is a company that is firing on all cylinders, right in the middle of a massive tech revolution.
I mean, let's just start at the top, with the CEO himself, Sanjay Mehrotra. In the company's latest report, he was crystal clear. He said they set new records on basically every single metric that matters, and then he said he expects to do it all over again next quarter. You just don't see that kind of confidence unless the business has some serious momentum.
And here's the big headline number from their second quarter: over $23 billion in revenue. But you know, the real story isn't just how big that number is, it's the growth. That figure nearly tripled compared to the same time last year. For a company of this size, that kind of growth is, well, it's just staggering. And it's not slowing down, it's actually speeding up. This isn't just one good quarter. Just look at this trajectory. You go from $13.6 billion in the first quarter to $23.8 billion in the second, and they're forecasting a whopping $33.5 billion for the third. That's not just growth, that's an explosion.
So, what's the engine behind all this? It's one word: AI. Specifically, it's the absolutely insatiable demand for something called high bandwidth memory, or HBM. Just think of it as the super-fast memory that lets AI models crunch massive amounts of data. And the demand for it is so intense that Micron is completely sold out of HBM through all of 2026. Some reports are even saying orders are backing up into 2027.
This insane growth has pretty much forced Wall Street analysts to just tear up their old spreadsheets and start over. Before this latest report, the consensus for 2026 revenue was around $80 billion. Now, it's been massively upgraded to $109 billion. And it's the same story with their earnings per share, which jumped from about $34 to over $58.
Now, to really put this into perspective, just look at this comparison. The entire semiconductor industry is projected to grow at a really healthy 21% a year. Micron, their forecast annualized growth is a breathtaking 250%. So they aren't just riding the wave, they are leaving the rest of the market in their dust.
Okay, so let's recap. We've got record earnings, sold-out products, huge future demand, and analysts just tripping over themselves to upgrade their forecasts. The case for this stock seems completely airtight. So what on earth is the problem? Why is the stock falling?
And that brings us to the other side of the story, the bear case. This is where we get into all the fears, all the uncertainties that are clearly weighing on investors' minds, and they're powerful enough to fight back against all of that incredible news. It really comes down to four major fears that are spooking the market: geopolitical risk, the company's huge spending plans, some simple profit-taking, and brand new competitive threats. Let's break each of these down.
Okay, first, geopolitics. The key issue here is the Strait of Hormuz. Any escalating conflict in the Middle East puts this critical shipping lane at risk. Now, about 20% of the world's oil goes through there, which is a big deal on its own. But for chip makers, it's even more specific. The entire semiconductor supply chain depends on energy and key chemicals, like helium and sulfur, that come from that region. A blockade there could throw the whole industry into chaos.
The second headwind is all about money going out the door. The term for this is capital expenditures, or CAPEX. And it's really just the money a company spends on big, physical stuff, like building new factories. And for investors, seeing a company spend a ton of money, even for a good reason like expansion, can sometimes feel like a big risk.
And Micron's planned spending is enormous. The company said it expects to spend over $25 billion in fiscal 2026 alone. Now, this is all to meet that crazy AI demand we talked about, but investors are getting nervous. That is a huge amount of cash to burn, and it creates what Wall Street calls execution risk, basically the fear that the projects could hit a snag or that the AI boom might cool off right as all this new supply is ready to go.
All right, the third factor is a lot simpler. It's just plain old profit-taking. Before this recent drop, Micron's stock had already jumped 48% just this year. After a run like that, it's pretty common for investors to decide to sell the news. That just means they cash in their profits right after a great report comes out, instead of sticking around to see what happens next.
And finally, the competitive landscape is starting to shift. For a while, Micron had a really clear lead in HBM, but now we're seeing reports that their rival, Samsung, is getting into NVIDIA's supply chain. That's going to make things a lot more competitive. And on top of that, there's a potential disruptor. Google just announced a new technology called Turbo Quant that it claims can cut the memory needed for AI tasks by 6 times. If that technology works as advertised, it could really dampen the overall demand for memory chips.
So here we are with two completely opposite stories. On one hand, you've got this incredible, explosive growth. On the other hand, you've got this wall of worry. And that brings us to the bigger picture, this classic battle between short-term market volatility and a long-term vision.
This really is the central tug of war here. The bull case is built on real, tangible, record-breaking results that are happening right now. The bear case is built almost entirely on fears about the future, geopolitics, spending risks, and new competition. And right now, the market is trying to figure out which one of those stories matters more.
And what's really fascinating is that this isn't the first time we've seen this movie. If you look back to the second quarter of 2023, Micron also beat all the estimates, and the stock still dropped 8% that day. So this suggests there's a pattern here of traders just selling into strength, almost no matter how good the news is.
But while the short-term traders are selling, some long-term investors are looking at a very different picture. One analyst who's projecting out the continued growth from the AI boom calculated that Micron stock could potentially reach nearly $2,500 a share by 2030. That is a jaw-dropping number, and it just highlights the huge gap between today's fears and the potential long-term reward.
So after looking at the incredible bull case and weighing it against the very real risks of the bear case, what's the big takeaway from all of this?
Ultimately, Micron's story makes us ask a much bigger question. Is the stock's weird behavior just a temporary market freakout, or is it actually an early warning sign for the entire AI boom? A signal that maybe the market is getting nervous about the absolutely massive, eye-watering investments that are required to build the future of artificial intelligence. Now that's the multi-trillion-dollar question.